In this video, we'll be discussing why this chart is the most important for you to be looking at right now in the markets. We'll also be talking about our technical analysis levels for the Nasdaq, QQQ, SP500, dollar index, gold, Tesla, Bitcoin, and more. We just saw some pretty wild swings with Nasdaq really leading the charge in terms of bearish sell-offs. The question is, are we in a correctional crash yet in the stock markets, or will it begin soon? Stay tuned to find out more. Alright guys, well, as we like to do on this channel, let's take a quick look at the heat map for yesterday's moves to try to get an idea of what's going on in the markets right now. And it was clear to see that banks were down, energy was down, Tesla was down as per usual at this stage. But everything was a lot worse and then actually recovered through the day, especially the technology area. If we go and have a look at the major indices, you'll notice here the Nasdaq actually almost eked out a profit by the end of the day while it was starting very down. It was actually even worse in the pre-market before it opened. Some stocks were moving down 6%. Some even had massive returns. Palantir was down around, I think about 8, 9%, 10% pre-market, and then ended the day positive by a lot as well. So some phenomenal moves here in Nasdaq stocks, possibly a shakeout from Wall Street there. And then we had SP 500 down 0.87%, Dow Jones down 1.4%. So really it was another rotation. This time though, the rotation was clearly into other sectors. So it was out of, let's say, energy, out of financials, out of industrials and utilities, and into technology, materials, etc. The one standout, still materials, number one sector, and we've been pretty much following this for a while. We're in a super cycle right now, materials, and hopefully it keeps going for a little bit. But remember guys, it will end, and when it ends, materials don't come back for quite some time. So you must be very well aware of the super cycles that go on there. So we're in earnings week still. Of course, we've still got earnings coming out, and Thursday is really probably the big day. Wednesday here, if you own one of these companies, of course, you'll be caring about it a lot. But I think Thursday is the biggest day. We've got Alibaba, Walt Disney, Airbnb, some very large companies doing reports on those days. And I think a lot of people will be interested in those reports. Speaking of reports, we've got an 80% beat report still. It's getting a little bit lower as we go through all of the S&P 500 and earnings companies. And you'll notice here we have 1,482 beats versus 368 misses. Now, even the beats, they're not beating in their core areas all the time, and that is why we have seen some sell-off. Now, we talked about this on the stream, and I know it's a little bit blurry, but it brings up a great point. This is the recovery after multiple different crashes across time. And you'll notice here in 74, the crash with the sugar rush first year recovery, we call it the 1 year thrust here. And then year two was relatively sideways. Then we had 2000 and, or we'll go to 1983 next. 1983, 1982, 1 year thrust, sideways action. 2003, thrust, sideways action. Then 2009, of course, 1 year sugar rush with sideways action in year two. So I think this is actually a very clear idea of what the market's going to do. It looks kind of similar to 2010, 2009, where we've got that initial burst during the year. Then we've got some sideways movement throughout the year, followed by strength into the close of the year. That's actually what I'm expecting in this scenario. But I just wanted to bring it up again and again because I think it's a time now to learn about some new things. And we'll be covering it on this channel. So if you're not into options or you haven't done options before, this is the type of market where traders come out to play. This is less the market where investors are now finding the best next value stock or something like that, because a lot of those moves have already occurred. So it's all about getting down to the technicals and getting down and dirty in the charts, I think, over the next 12 months. And of course, you can do that by following this channel, coming to our pre-market stuff, and really empowering yourself with some great technical and fundamental concepts, as well as cyclical concepts that happen in the markets. So we'll start today's technical analysis talking about the volatility index, the VIX here, 21.8. So a clear closure for the daily above the 20. This is pretty significant. I think this means that there is some volatility in the market. Of course, the VIX, or the volatility index, is one of those things that can switch like that. You know, it can switch very, very quickly. If the weekly held above 20, I'd feel a lot more like we're in a bit of a correction here, but it's really more about the technicals. This is maybe 5% of the way that you make a decision whether we're going bearish. It's only one concept. It's like put call ratio. It's only one reason that you look at the markets, and they don't allocate that much like percentage to it when you're making a decision. This, however, is a little bit more of a positive towards bearish side action in the markets, and you'll see why. So we had a sell-off followed by momentum, bullish momentum. We had a sell-off followed by bullish momentum. This is the 90 level on the US dollar index, often seen as a bit of a hedge against uncertainty in the markets. And we also have this 9336 line. You'll notice there's resistance, and it's moving on up right now. Now, if it breaks through that line, what has it done? Well, if you go down to something like a 2 hour, you're going to instantly notice that we have this clear level of resistance across this board. And this is basically market structure. Effectively, it's a double bottom with a trough here and a trough here, and of course, an intervening peak at this point. So what do we expect? Bullish momentum to come through for the dollar index, which could lead to further selling in the stock market. And usually they all kind of tie themselves together, and I'll get to the SP 500 a little bit later in this video, and you're going to see exactly what we're talking about as a community here on the channel. Then we move over to gold. Now, often seen by many as the hedge against uncertainty. I think of gold as more, it will hedge against uncertainty up to a point. And then when the market moves too much, it actually ferociously moves down as well, because really the only hedge against uncertainty has always been things like bonds and the US dollar. That's usually where most money has been put into. Now, I do think that gold is going to move down a little bit here. You'll notice that our first level, 1825, was hit, went a little bit higher in that extension phase. It was glorious. I'm still leaving these lines here just to show you where, I think the best take profit or the best area was technically. And now I do expect some pullback. Now, how do you figure out where it's going to pull back to? You've got to go and look at previous trends on moving averages. So the 4-hour 20's been hit. Now, has the 4-hour 20 been pretty good? It's been not too bad at getting pickups. The other one that I like trading with gold is 8 hours. So 8-hour 20s, 8-hour levels. And I do feel like gold is kind of tipping over here a little bit. If you're wondering where the next spurt of bullishness will happen, it's when it closes through 1842-ish. On the 8-hour, when that occurs and it closes above, I expect it to actually blast through 1850, because the coiling has started before the key psychological zone, which is 1850. And because that's happened, usually 1850 will not be a good resistance on this chart. It's kind of similar to down here. 1797 was the resistance, and then of course when it blasted through that, it destroyed 1800 and kept on going. Silver's similar. Silver's still trading in the middle of the ranges. Basically, you go over to a silver chart, you'll notice we've got that $28 resistance, and we're just kind of coiling underneath that. I expect it when it goes back up to 28 to actually blast through 28 and then move on to the 30. I think 28 isn't going to be that much of a problem as long as the correct amount of coil and price action is seen. We'll continue to follow it throughout the videos over the week. We'll go over to Bitcoin before we go into the markets, and we'll just quickly talk about this. Still nothing is happening on Bitcoin. We're basically stuck right in a range, guys, and this range is between 53,000 and I'm going to have 60,000 as my resistance, because I think, again, when we break or we come up to 60,000, we're going to not only blast through that, but if you took the range here of the channel, which is effectively formed between this level and around that 58, 59 zone, and you actually extrapolate that out from the high, see how it's predicting a new peak? And even on the downside, see how it's predicting a new low? I actually think that whatever side this chooses to break out from, we're going to either see a new all-time high, or we're going to see a new, not all-time low, of course, but a new low that could seriously show concerns here for the crypto market. While Bitcoin does this, it's cool because we're in altcoin season and all the other alts are going well. Ethereum's going crazy. It's back to 4,200, etc., etc., etc. But I want to see this thing hover and then either break out to the upside, not to the downside, if you want the crazy bull run to continue in these markets. Let's go over to US oil. Looking really good here for US oil. You'll notice there's quite a lot of rejection wicks around here showing bullish momentum. This is a daily chart. Long leg doji, you guys know how I feel. A little bit of movement above long leg doji, closure, decision made, and I expect it to go to a new high. So we've hit that resistance initially. It's sold off. I'm still pretty bullish here on oil now for a little while. And if we actually scroll through back into the past, you'll see where our target is, around that $75. I actually think oil is kind of over at that point. You'll see an article probably written in the newspaper around that time that'll say oil to $100 question mark. That's when you want to get out of oil. It never works out well when oil hits $100 or people talk about it hitting $100. That's like elevator talk, and you know what I feel about that, guys. It's not good. Let's move over to Tesla in the stock market now. So we have here the most important weekly zone. So I'm looking at the 600, and the great news yesterday was Tesla held the 600. It opened up below, it then moved through the day, and did it close still down? Yeah, it was down 1.88%. You say, Tom, why do you care? It closed down still because it didn't breach 600. Super important for you bulls out there on Tesla. Harry, if you're out there, you're probably happy with this one. What I'm looking at here is the weekly, and I'm doing that because if we breach 600 and close below on the weekly, I see it going to 450. I'm not even kidding. I actually think it goes all the way down here to the next level of structure. That's how important these levels are. And we go over here to the daily, and you'll notice it bounced off the 600. It actually was even lower in the futures. It was about 582 in the futures, and then it bounced up, opened just around 600, and then of course tried to fill the gap. In fact, it did fill the gap almost perfectly there at one point during the day. Now, how do we know when this thing's actually bottoming out? It's not going to be easy because Tesla moves very quickly. So usually it's going to be something like this, what we call the lightning bolt. Trough, peak, higher trough, higher peak, breakthrough, and then it moves on up to the 666. Now, 666 is going to now be a sell zone for day traders. There's going to be a lot of sell pressure that comes in around the demon zone because that was the level of buying pressure last time. So be very, very careful there if you're day trading or looking at Tesla. I think this is the next important zone. Of course, any breach below 600 really exposes some pretty serious lows. We'll continue to follow it throughout the next couple of days. Now we're into the indices. We'll start off with the Nasdaq. So the Nasdaq actually played the game perfectly. You'll notice here yesterday, we were talking about that 13.4 being the point of resistance for the day traders. Yes, it was. 13.3 to 13.4 was kind of our zone where we expected the selling to begin. And I guess it did. It even stopped a little bit at the 13.3 to, was it 13.288, which I saw a few people saying. Did say in the room, my feeling was it would probably go up to these kind of areas and then it would move around. So this is the most important zone now. Now, for bulls of the Nasdaq, it's just simply get above 13.4. When you get above 13.4, you're breaking through this previous level of support, which has now become resistance. You're effectively creating a trough, a peak, a higher trough, and bang, straight on with a new higher peak. Very bullish, pretty much says, hey, for now, we're done with the downtrend. Now, if it starts selling off this area, which is where the bears are trying to regain control here, you can see they've just sold it off to this previous little peak over here. This is going to be the fight, and this is where they're going to fight each other. I expect the market to be somewhere around here or right here on the open, either the top resistance or the top support. And if it breaks the low, then of course selling will incur throughout the day. I expect even possibly a new low to be formed down to the 13,000. And if it breaks to a new high, then it really could rally quite strongly over the next 24 hours. So we'll be watching it pre-market tonight. This is the fake futures, so what can we do? We have to come in closer to the market to see what's really happening. When we go to the QQQ, we're on a 5-minute chart here. It'll become more apparent how important this level is. I don't know why this line's here, so let's get rid of that because that's just stupid. And it seems that TradingViews decided to just put random lines on here. But the great support becomes very apparent here on the QQQ. One of the most important things to look at is always to look at the real indices. And you can see the large move and the large pickup that happened yesterday. It's all important zone now for it to break through or below. We'll continue to watch this. It's always good to watch the real markets. Now onto the SP500, because I think this is where the real bulls and the bears are fighting it. This is the king daddy, if you want to call it the king, the queen. I don't care what you want to call the S&P 500. It's the best index for getting us the best signals of the overall market strength or weakness. And we've been talking about this 4120 area for quite some time. Now, what's most important here? The close is the key. I bet you heaps of people were trying to short it here when it goes through. It didn't close on any significant time frame. We're on an hour here and it didn't even close down. So just remember, forget the rest. It's all about closure is the key. And that's, I guess, the biggest motto here on the channel, because I've been burnt by it before. I'm sure a lot of you have. It's all about learning from your past experiences. And sometimes it pays to wait for the confirmation so that you don't get beaten up by the nasty algorithms. And I think yesterday was a great example of the nasty algorithms. As of the time of recording this video, we're sitting at 41.42, so about 10 points underneath where it actually closed. And 41.20 is still the key support. I'll be looking at this very intensely on things like the daily to see whether we break below. That type of time frame is really what I'm looking at. But once we break through there, I expect some pretty serious selling to come in to the markets, into the Nasdaq as well, and for us to instantly try to return back to the weekly 20, which is sitting around 39.68, which is also the previous peaks over here. So that's the type of sell-off I expect that to happen, but it needs to get through this zone. Of course, the Nasdaq is the best precursor of actually some value where you can actually pick up a good day trade, because once it breaks through that resistance, it should move to the next level. The SP 500 is very hard to trade unless you're looking at the bear side, I think, at this stage. All right, guys, well, that brings us to the end. Thank you so much for watching this video. If you enjoy it, please remember to subscribe. Hit that like button if you enjoy the content as well. And I'll see you 1.5 hours before the pre-market. Bye for now, guys.